We've been listening over the last, I think it's like 6 months, to the conference calls of long-term care facility REITs, real estate investment trusts. Okay? These are dividend plays. They yield between 6 to 9%. They're real estate investment trusts. They own properties that are long-term care facilities. So a business has a long-term care facility, gets into a deal with the REIT, gets cash, helps them build out their property, okay? More beds that get filled, more business the company's doing, more money goes into the pocket of the REIT, dividend increases. That's the story of these names. And we had this once-in-a-lifetime tsunami hit the industry with COVID. And an implosion in the ability to place nurses. And if they can't place nurses at long-term care facilities, they can't bring in new patients, new residents, not patients, residents, okay? So we have this unique situation. It's like a 100-year storm. The businesses get destroyed. Management will tell you on those conference calls we've been listening to for the last 6 months that they have an enormous backlog. What does that mean? It's just demographics. More and more and more people need to retire into a long-term care facility. And that stretches into infinity right now. Those businesses are just exploding with backlog, which are residents, people wanting to become residents of long-term care facilities. They cannot bring these people in because they don't have staffing. That's the bottleneck. The last couple quarters, we've been listening to the call, and the management's been saying things are getting a little bit better, but staffing's still an issue. So then we listen to a staffing company, which has a better look into the staffing issues than the REIT itself. Okay. First of all, the stock's breaking out. Stock's got a 91 relative strength. And they said on that call that business is normalizing. They place nurses in these facilities, along with all other types of healthcare facilities. Okay? So when I heard that piece of news, that was the click of the puzzle piece. That 9% dividend is money good, in my opinion. Disclaimer, this is fundamental research, right? It's true, I've been doing it 35 years, but it doesn't mean I always get it right. So that's just a disclaimer. So I'm doing the research, putting the puzzle pieces together. This 9% yield, to me, is safe. Management has been saying it's safe for the last 12 months, and it's been the perfect storm of misery for the business. And they still say it's safe. And now we hear their biggest bottleneck is opening up, which means over time, they'll be able to hire more nurses, bring in more residents, and not only is the dividend safe, but the REIT will start increasing the dividend over time as business starts to grow again. This could be like a once-in-a-lifetime opening in a long-term care facility at a 9% yield. It's just, this is what I live for in my dividend portfolio.